Hey everybody, welcome to today's edutainment. So I hope everybody's well. I'm going to touch on a whole bunch of stuff today, try weave in as many charts and on-chain pieces of information that we can to build a good picture. And as usual, it's always edutainment. So first of all, there's a lot of hopium going around, a lot of people talking about, hang on, turn off this other one, talking about bottoms and price targets, which we haven't heard in quite some time. So that's extremely bullish. So the title today is When $100,000 Bitcoin with inspiration from Bloomberg. So let's jump in and not waste any more time and go through this. So edutainment, you guys know the drill. And we'll start with the good news because there is a ton of it. Now, first of all, the market does look pretty red when you're on everything other than Bitcoin. Bitcoin's down about $600. But everything else is down worse. And the question is, did we just go into altcoin season? So we'll touch on that as well a bit too. But you can see the only thing in green are stable coins. And of course, everything benchmarked against Bitcoin is down. But Bitcoin was also very down on the dominance, which we'll touch on as well. Now, one of the things I did about an hour and a half ago, and it's amazing technology. It just blows me away. To get 2,500 survey respondents for a traditional survey would normally historically take weeks, and you can do it in an hour on Twitter today. So I just think it's very impressive. But we had a little over 2,400 responses in just over 60 minutes. No idea what it is right now, but check it out on my Twitter. Watch for the scammers. But this is interesting to kind of set the stage and get a feel for what people are thinking. And the inspiration from this actually comes from Will Clemente as well, as people are hoping for that revisit of the 17,500 or below Bitcoin. And I'll show you some charts on that too. So here you can see my question was, is everybody still doubting the Bitcoin rally, up 30% in the last 50 days, 5 major higher highs, or is it a head fake? So 23% believe the bottom is in and 25 to 28K is next. So that's about a quarter. That's okay. A lot of people believe it's a complete head fake and we're going to 12,000 next. That's about 11.5%, which is not that much, but there is a party that believe everything they hear on the internet, and that's those guys and gals. Then the next one, we will revisit 17,500. 36% of you believe that. That is a big chunk. That's over a third. And we'll see what happens. And then chop sideways until pivot, 29%. So the way I see it is I see a lot of chopping sideways. And maybe if we can break that 25K glass, we'll hit 28K. So watch that carefully. That survey will be over in about 22 hours. So check it out if you want. I'm sure the numbers won't change much. Once you have an N over 1,000, they tend to be pretty stagnant. Now, in terms of a new section called the floor callers, Morgan Stanley jumped in, and Morgan Stanley is an American banking giant, and they believe there are 2 major factors that could signal another bull run for Bitcoin. And number 1 is they believe the Federal Reserve switching back to an expansionary monetary policy could spark another rally. And also the second point is there's a lot of leverage out there, and that might be a key sign that the market might be on the verge of another rally. So I'll talk about the number 2 point with some data. The number 1 point I kind of covered yesterday with the new Inflation Recovery Act. Of course, spend money to fight fire with fire to stop inflation. Got it. Makes sense. Second group, JP Morgan came out and said, cryptocurrency markets have already found a floor. Whoa, second floor caller in a day. And the bank analysts see Ethereum's upcoming merge upgrade as the main bullish catalyst for Bitcoin and other cryptocurrencies. We'll also talk a bit about the merge too, what that means, and tie that into options action, which is what Morgan Stanley was calling for too. So a lot of really good, interesting stuff. But again, everything is interrelated. Now, point number 3, Mike McGlone. Brilliant guy. Mike McGlone tweeted today, a few hours ago, is it a matter of time? $2,000 gold, woohoo! $100,000 Bitcoin, woo! Or $50 crude oil. And he believes the energy spike is proving its own worst enemy. And we'll talk more about energy as well and crypto in a minute. There's got a lot to cover today. We'll try to do it as fast as we can. But the couple of things to dig into here is, what would you prefer? So let's look at gold gainers. So I pulled out a little chart. Wouldn't it be exciting if gold could hit $2,000? That would be a 9% gain from where we are now. But remember, 11 and a quarter years ago, we were at the same price. And by my calculations, if you take out the loss of purchasing power over the last 11 years, your $100 is worth less than 50. That means your gold has lost over half its value if you've held it for 11 years. Just math. But if anybody wants me to do a detailed historical analysis of gold versus Bitcoin, and if it's an investment hedge, let me know. Some people were asking for that, but I don't know if there's many gold bugs in the audience. But it is interesting to see as well, because it can also be an analog for other assets. Now, 9% on gold, but per Mike McGlone, you could get 342% on Bitcoin. Whoa. That is pretty impressive. So what's in your pocket? I know a lot of top analysts are saying gold will be the top performing asset for 2022. Every time I hear that, I laugh because I've been hearing it for 25 years. And yes, they did have some good years about 15, 20 years ago, but it's been a long time and I don't know if it's ever going to happen. But here, just mapping that out, I added some extension lines as to how the possible path could be to $100,000 and when we could get there, maybe by summer 2023. Who knows? But it would look something like that. But first, we have to get back to all-time highs. But that's pretty impressive. And for Mike McGlone to come up and pound his fist on the table and say, it's only a matter of time. We'll see. Now, let's look at some correlations. This is cool stuff from Coinmetrics. It looks at the Bitcoin correlations. And what has happened very lately is you can still see a very strong correlation with Ethereum. That is 0.893. Gold, 0.218. Thank God we're not correlated to gold. That wouldn't be a good thing. And the S&P 500 has come down. It's now 0.645. It was up around 80 to 90 for a while. So it's kind of breaking that correlation, which is also a positive. And the more broken correlation, the better it is for Bitcoin. Now let's look at Bitcoin over the last 50 days, and that 30% gain. I created this chart in TradingView and put the red arrow in the bottom left. That was kind of the capitulation event down to 17.5. Since then, we've been going up over the last 50 days, and I added some big green arrows pointing at some of the kind of higher lows, as they call them, and drew a rough trend line as to see where we're going. And it seems to still be holding, even though we had a little bit of weakness today, dipping under 23K, but the pattern is still intact. So we will watch this carefully. But all in all, it seems very bullish, this particular pattern. Let's look at the dominance real quick. As you know, I always say Bitcoin will revolve between 51 and 49. Sorry, 51 and 39. And here we fell as low as 41% dominance. And what does that mean, ladies and gentlemen? Well, that means the money is going into other things. Let's dig into what they are. But a lot of people are surprised that people are not going into the pristine asset. They're investing into other things. It's like people aren't investing in gold. They are investing in Bitcoin, but not as much as some other assets. But before we do, we're going to talk about Plan B's new trading rule, which I thought was pretty cool. He built a model and published a little white paper on his new trading rule, and it's really simple. It's basically based on the monthly Bitcoin price and the monthly RSI. And his strategy outperforms buy and hold by 10x over the 11 years back-tested. Of course, things are very different. If you're buying at Pico bottoms and selling at Pico tops, 4 or 5 times, of course, you're going to do very, very well. But it's hard to time. But his model is very, very simple, and I actually tested it, and it's kind of a good one to know. So basically, all you do is you plug in your RSI based on the monthly, and if the RSI is above 90% over the last period of time, and it drops below 65%, then you sell your Bitcoin. And if the RSI is below 50% and it jumps 2% from the low, then you buy, else you hold. That's it. A very simple trading rule. And sometimes the best things in life are the simplest things. So nice work, Plan B. Now, back to altcoin season. Are we here? I shared this yesterday in the Patreon community, but here it's clear as day that we are at 94. And basically, this indicates when 75% of the top 50 coins perform better than Bitcoin over the last 90 days, it becomes altcoin season, and we are way above 75%. So that is pretty staggering. And this, of course, excludes stablecoins and asset-backed coins like wrapped Bitcoin and staked ETH, etc. So pretty impressive, but whatever goes up comes down. So expect Bitcoin dominance to be on the rise again soon. We're already seeing that happen right now as we speak from the very first chart that I saw. So expect everything to be choppy as we go forward. Now let's look at some of the rotations that are going on. Here you can see traders are rotating from Bitcoin and stablecoins into alts until today. That's changed. This chart's from yesterday. And a big thank you to the team at Arcane Research for putting together. But you can see the small caps are up 9%, mid caps 7%, the large caps 5%, and Bitcoin 2%. So everything else has really outperformed Bitcoin over the last week, hence the altcoin season chart. But that's going to come back down, I'm pretty sure. Now let's look at some of the gains as well, as people have been sitting on the sidelines and waiting for Bitcoin to hit 12K. There's been a lot of money to be made, and people are recovering their brokerage accounts, which is a good thing. Some are back at break even. Some are showing green for the year. Again, it's all about being on the right horse at the right time. So here you can see I put together a few proxy names. One is Marathon, which I did talk about being a miner that has some shaky issues. Performing well, but I'm worried about the upcoming payments that they have to make. They are up 167.41% since the 1st of July. Hut 8 is up 81%. MicroStrategy 93%, and Square 28%. These are all kind of Bitcoin proxies, and I'm very well aware they all got beaten to hell and beaten down. But it shows you, buying those dips, running into the burning building can really pay off if you have the courage to do so. So I just want to highlight some of that too. Let's talk about fear and greed. You can see here, again, I defaced the Arcane slide with a little red arrow and put in the reminder of how the different cohorts are grouped together. 0 to 24 is extreme fear, 25 to 49 is fear. We are very close to being out of fear and moving into greed, and that typically means bull market time, but we're not there yet. We're sitting at 42. This is the highest level since April, so that's a big win for the space, and the market sentiment has been steadily improving since the middle of June. Even after this improvement of sentiment, again, we're still not out of fearful territory. Again, that was also reflected in the reason for my little tweet poll today, to get a feel for what people are thinking. And you can still see like a third of the people are still fearful. And maybe depending on, some are very fearful too, expecting a 12K Bitcoin, 11% of them. So the slow growth of the index indicates an inherent fear among the market participants that have been maybe hurt or stung by the recent events in the crypto market. So watch this carefully. But now you see the big money guys, the JP Morgans, the Morgan Stanleys, and the Bloombergs all saying, boom, 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 bottom is in. Let's go. Rally on. So it hasn't trickled down to the general populace yet. So let's look at money flow. Follow the money. This is from James Butterfill. Here you can see the investment products saw inflows totaling, I don't know, about 60, 70, 90 million. I can't read it exactly from the chart, but it's still positive. Or is it really small? I think it might be really small in week 32, like 5 million or so. But that is not that good, but at least it's not negative. Now let's look at it by crypto asset and find out exactly what went on. Now here we see the problem. Ethereum still has money coming into it, which is good. Year to date, still 300 million to the minus. Bitcoin had an outflow, and short Bitcoin had an outflow. That's weird. They're both going in the same direction. Solana, slightly positive, 0.6, and that still has been winning the game. XRP, Cardano up a little bit as well. So all around, not too bad, but that was impressive again for Ethereum. 7 consecutive weeks, I think, of inflows, totaling about 159 million, which is a big turnaround, and everybody is excited for, you know what, the merge, as they call it, moving to proof of stake. So let's talk about stablecoins, since we hinted at them earlier. This is from Macro Micro. Here you can see the blue is the stablecoin divided by Bitcoin exchange balance, and it's going down, which is good. And as that typically happens, Bitcoin price goes up. So remember, money is on the sidelines coming into Bitcoin, driving the price up. So as the amount of stablecoin balance goes down, Bitcoin price goes up. So we'll watch that carefully. Now let's look at some options information here. You can see this is the end of September options I looked at last week. Last week, the max paying price was 29K. It's fallen a bit to 28K, but you can see a ton of bets out to the right in the green, which are call options, which are bullish. Puts, still some put action there. You know, per the survey, there's still people with the big chunk calling for that 12,000 Bitcoin, also 18,000 Bitcoin, which is just above the 17.5. So some people do expect that double bottom or worse to happen. But overall, the paying price is 28K, and that's where the big bets are being made. And the put call ratio is 0.55, which again is pretty bullish. Let's look at Ethereum, because this is, we're going to switch gears to bad news in a minute. But before we do that, we're going to look at Bitcoin versus Ethereum open interest. And something interesting did happen, and this is from Glassnode. And basically, for the first time, at least that I've ever seen, and per this chart, the open interest for Ethereum options is greater than that of Bitcoin. So that is super interesting. The Bitcoin open interest is the pink line, and the blue line is the Ethereum. And you can see they just eclipsed Bitcoin recently. And this is because derivative traders are placing bidirectional obvious bets for Ethereum because of the merge planned for the 19th of September. And first time in history, Ethereum has now more open interest. I think about 6.6 billion or so, and Bitcoin is at about 4.8 billion. So that's a big difference between the two. And it's not an all-time high yet for Ethereum, but it's very close. And we'll just watch this carefully. Again, there's just so much excitement and so many bets happening because of the merge as we go forward. Now, switching gears to the bad news. Now, some of the elements here in the bad news section may not be bad news depending on who you are. It's like, you know, if you're all in alts and it's altcoin season, it's good news. If you are all in Bitcoin and it's altcoin season, it's bad news. So everything has a flavor. But I did stick this here. This is the Ethereum end of September options information. And the max pain point here is $1,500, which is bizarre because it's under the current price of about $1,700. And just to reiterate what MPP is, it's basically options tend to gravitate towards a strike price where the most open puts and calls expire worthless. And this is that max pain price. And this is $1,500 for ETH. So there are some big volume bets placed in the lower numbers below the strike of 1,700 and change right now. And that's why they are there. But they may have been made a long time ago. So that's another one worth keeping an eye on. Now, from Will Clemente, the one I hinted at the beginning, this is the Bitcoin Coinbase order book. And the bids in the Bitcoin order book are stacked down under 17K and below. And this means there are a lot of people hoping to buy Bitcoin lower. They have all those limit orders in there sitting. Now, the last time the order book was this skewed to the bid side was the grind up from the March 2020 lows. So again, I don't know what's going to happen with all these orders. If you ask me, I think the probability of us going below 17.5 and these orders at 17K and below filling are extremely low. We're talking less than 10%. But again, we have to see exactly what it is. Maybe they know something we don't know. Maybe a huge black swan could happen and take us down. So let's watch that carefully. Now, this is another one. It might be a political hot potato, but those that are into crypto may like it. Others will think it's bad news. So I stuck it in the bad news category. So Iran makes first import order using cryptocurrency. Now, the reason this is in the bad news section is because if you are excited about the adoption of crypto, it is fantastic news. Especially one of the things that I always said is moving from a petrodollar to a petro Bitcoin kind of currency. But it's bad news if you do not like Iran skirting US sanctions. And that's exactly what they're trying to do. Now, Iran made its first official order import using crypto. They didn't give details as to what they bought or which currency they used, but I assume it is Bitcoin because they do control about 4.5% of the global hash rate. So they've been mining Bitcoin for a while right now. So they're using flare gas and maybe oil to generate energy to mint new Bitcoin. And the order as well is worth $10 million. And it's a test. It's a first step towards allowing the country to trade through digital assets and bypass the dollar and the global financial system, which is denominated by the dollar. And again, it's kind of an interesting time to see where it happens. But I think also the Ministry for Industry said the use of cryptocurrencies and smart contracts will explode and be widespread in foreign trade by September. So September is not very far away. We're already in August. So we'll be watching this very carefully. But this could be a game changer for the whole crypto space. So again, depending on who you are, it's either very good news or very bad news. Now, let's look at the dollar versus Bitcoin. A big thank you to Sanjay for sharing this with me from Delphi Digital. King Dollar continues to flex its dominance. So this is the yellow line is the Bitcoin change year-over-year percentage, and the green is the dollar index change year-over-year percentage. But you can see here that it is up over the last year approximately 15%, and it looks pretty toppy. But let's look at the chart, and that data goes back to, I think, 2016. But let's look at the DXY from a chart perspective. And remember, the dollar index, you're comparing the dollar, which I call the least worst of all the other fiat currencies, which includes the euro, yen, etc., Swedish krona. And while the money printers go burr all over the world, the US is slowing down their money printing. But soon, with the new bills, etc., that need to be funded, they may fire them up again. So we'll see. But either way, the most important thing to see here is this. For me, what I look at is the dollar index dancing along the 50-day moving average, which is that red line. If it breaks through that, that will be extremely bullish for Bitcoin. If it dances along it, it doesn't really matter. Again, you're comparing the least worst to a bunch of crap, so it shouldn't really impact Bitcoin. Now, time for a little bit of ugly news. Now, recession. Here, yet another indicator that recession is here. This is from Sven Henrich, the Northman Trader, on Twitter. And every time unit labor costs exceed 7% year-over-year growth, the recession has followed. And the current read is 8.9%. So, ladies and gentlemen, yet another rubber stamp. We are in a recession. Don't believe what your politicians tell you. Now, another recession telltale. This is from Charlie Belillo. This is data going back to 1947, ladies and gentlemen. And we've never seen a 2-quarter decline in real GDP of this magnitude, about 0.63%, without the US being in a recession. And the last 4 times the spread between new orders and inventories in the ISM manufacturing index was this negative, the US was already in a recession. And the 2001, 1990 to 1991, 1981 to 82 recessions never had readings this low. So this is, again, another kind of rubber stamp. You could assume, yes, we are in a recession. So I don't mean to finish on a bad note, but there's always going to be ugly news we need to share. And I like it to be fair and balanced. If it could, all 3 sections could be equal, it'd be great. But I couldn't find a lot of ugly news. Anyway, hope you like the content. KPM, knowledge per minute. If you did not get a new piece of knowledge every 60 seconds, don't hit the like. If you did, hit the like. Thank you, everybody. And thank you all for being here. To the 3,000 people watching live. And see you all soon. Hope you enjoy the entertainment. There it is, bottom right corner. Bye all.